Good morning, everyone, and welcome to the European crossover webinar. And we have seen the euro move up above 119. Actually, on looking here on the 2-hour chart, I have a little bit of a gravestone doji, and it's a relatively quiet session. There's a bank holiday, and you can look here on the flat on the month with some German Vandenberg data that just got released. We did see Italian GDP come out. It's a down minus 12.8%. They're looking for British will be down 12.4, and Spanish current account balance has not come out yet, but we did have a Spanish HCIP flash come in line at negative 0.6. Italian CPI will be out at the top of this next hour, and then at 8 a.m. Eastern we will have German CPI. And Canadian data, building permits and producer prices at 8:30 Eastern. That'll be the only thing we have other than Dallas Fed manufacturing. As I mentioned, we have a little bit of a gravestone doji here on the 2-hour on the euro, but once again, it's very quiet trading. And then inversely, we have a little bit of a mini hammer here in the cash dollar index, also on the 2-hour chart. Taking a look at cable, just rotating a little bit lower, but we saw a phenomenal close in cable. We're going to move on to the news. Just a quick little dip in NASDAQ. We've moved into these upper highs, and we'll just take a look quickly there, and then we'll go into the news. Actually, it's a pretty good little volume here coming in. A little bit of a dip. And actually, you look at it from where it's at, it's decent little sell-off overall. But nonetheless, at these heights that we're at, it's just been such a phenomenal run that even that is almost looked at just a minimal. Look at this. And still that puts us at about 60 handles from the high. But it's almost like as if it's nothing. We do have some support coming in here right there at 12,018. It's hard to imagine. Actually on Friday, I remember it being sub 12,000 and struggling there. And here we are still, even on the pullback of that many handles, we're still, above where we were on Friday. Pretty amazing. Stayed in a fairly tight range on Friday. Look at the S&Ps, also still way up here in the stars. Looking at the 2-hour chart. And we'll take a look at gold. Gold just pulling back, revisited that 1986. Remember, that's when we had the Fed, not Fed, but we had Powell's speech, and we got to 1986, and that was it. And looks like we did it again, and we've rotated a little bit lower from there, off about, I guess, about $20 from that level. And crude oil still holding up very well. Let's go on in. We'll go on and move into the news. Gold retreats as the dollar halts and dovish Fed lends support. Gold reversed course to trade lower on Monday as the dollar recouped some losses, although U.S. Federal Reserve's new policy framework that suggested interest rates would remain near zero for some time limited losses for the safe haven bullion. Weighing on gold, the dollar index steadied again against a basket of major currencies, but was on track for a fourth consecutive monthly decline. Choppiness in the U.S. dollar will spill over into how gold trades, said analyst Kyle Rhoda. The greenback took a big spill on Friday as market participants digested what was coming out of Jackson Hole Symposium, and then knock-on benefits to gold are still being felt. The Fed's new monetary policy suggested that the U.S. central bank's overnight interest rates already near zero would stay there potentially years to come as policymakers woo high inflation. Lower interest rates decrease the opportunity cost of the holding non-yielding bullion. Gold has gained nearly 30% so far this year, notching at an all-time high of 2,072 early this month, as investors seek to buy the metal as a hedge against possible inflation, currency debasement due to unprecedented money printed by central banks. Gold is expected to retest the old highs. I don't think anything's changed in terms of the underlying fundamentals, said Edward Beyer, analyst at EDF and Man. And on to the dollar. So the dollar was poised to register a fourth straight monthly drop on Monday as investors bet on the U.S. rate staying lower for longer, while the yen studied on a view that Japan's next leader will stay the course on the Abenomics economic revival program. The Chief Cabinet Secretary Yoshida Suga, a longtime lieutenant of Shinzo Abe, is in a favorable position. Japan's media reported as he is expected to get the backing of the important factions within the ruling party. The yen eased by 0.3 in Asia to $562, having climbed as high as $419 on Friday in the wake of Abe's resignation as prime minister for health reasons. Yen crosses also reeled in some of Friday's leap. Elsewhere, trade was choppy as the boost Asian currencies from a solid expansion in China's service sector had begun to fade a bit. Nevertheless, the Australian dollar touched a 21-month peak at 73.81 and remains set to post a straight monthly rise to the best streak in over a decade. The New Zealand dollar made a post-COVID high of 67.49. Chinese yuan, a 14-month peak at 6.844. The pickup in service sector posted to the catch-up and reviving consumption, said Mizuho's chief Asian strategist Ken Chung. In growth recovery in Q3 appears to turn more balanced. The euro was steady at 1903. Attention now turns to the handful of Federal Reserve officials due to speak through the week, beginning with Richard Clarida at 1300 GMT Monday, as they put more flesh on the bank's new policy framework. The speech last Thursday, which Federal Reserve Powell outlined as an accommodative shift in the central bank's approach to inflation, has weighed on the greenback as investors interpreted it as meaning rates would stay lower for longer. Against a basket of currencies, the dollar drifted higher to 92.31 in Asia, but is down 1.2% for the month. It seems clear to us, but we are at the start of a multi-year period of dollar decline from very elevated levels, said Societe Generale strategist Kit Jukes. Others expect that they may eventually override any uncertainty in Japan. Questions over Abenomics in conjunction with the broader dollar move leaves dollar yen vulnerable to the downside over the long term, analysts at MUFG wrote in a note. However, it is the broader dollar bearish view that will be most important, not a shift in policy in Japan, which we do not expect to be significant. Former Defense Minister Shigeru Ishiba, seen that the biggest risk as to the policies of continuity in Japan is favored in public opinion polls, but tracks party support, which appears to be behind Suga. Geely News Agency reported that Japan's ruling Liberal Democratic Party will select its next leader on September 14th. On the radar, later in the week is Australia's central bank meeting on Tuesday, where analysts expect no policy changes, but say an upbeat tone could boost the Aussie because the Fed's message was being so dovish. Eurozone inflation data prints on Tuesday, and U.S. payrolls due on Friday. With that, we're going to move into the FX and then onto the analysis. Let's see. Trying to pull up the notes and they won't come up. Let me go over to the ForexAnalytix page. Hold on. Go to basic technical. There we go. So the euro closed Friday with a new weekly high. The pair looks primed to test 2031, and you can see that here. Primed to test 2031 with 2144, the 78% of this move of 637 to 2554. Immediate resistance is going to be 1952, which we have not been able to get to it yet. 1952. Support will be 1816, followed by 1765. So let's go here. So meeting's going to be 1952. And support will be 1816. And let's go move into the cable. Cable closed at a new recent high, a new recent weekly high. The pair will be targeting 34.66, and we're looking at the weekly charts on these because, like I said, with these new highs, you have to get a little bit broader perspective. Cable closed at a new recent weekly high. The pair will be targeting 34.66 with 35.39 to follow. Immediate resistance will be 34.08. We supported 33.02, followed by 32.52. So immediate resistance will be 34.08. And supported 33.02. And once again, you can see we're looking high on the weekly chart. Look at that solid close here, right up here at 33.42. We're actually struggling here. Surprised we're not trying to push up a little bit higher, but like I said, with the bank holiday, it's keeping things relatively quiet. Let's go on and move on now to Aussie Dollar. So the Aussie closed with a new weekly high, now targeting major weekly level of 74.27. You can see that right there. Once again, the weekly chart, you can see the significance here of 74.27. Now targeting major weekly level 74.27. Resistance beyond would be 74.69. Support will be 73.07. So. With support 73.07. and onto the Kiwi. And these are all going to be weekly charts. I think the one chart I didn't use as a weekly, I think was the Euro New Zealand. Everything else I did is weekly because we're seeing such big moves. Obviously, I mean, look at the Kiwi right here. I mean, good strong move there. So the Kiwi posted a strong weekly close, but it's coming into the weekly level of 67.58. Confluence with 67.56, which is a 61% of the move from 54.62 to 75.66. Additional monthly resistance is also at 68.15. Support will be 66.86, followed by 66.45. So immediately what we're looking for here at resistance is right here at the 67.58. If we are able to get past that, we do have a monthly level at 68.15. And support will be 66.86. And to the dollar CAD, also a weekly chart. Okay, the dollar CAD saw a bounce off weekly level 30.46 to close the week at 31 even. The pair has the potential to slide and test a major weekly level of 29.82. Immediate support will be 30.46 with resistance at 31.46. So you can see right here on this weekly where we came up with why the market decided to go and hold that area, because that is a weekly level right here. So that's going to be it. And resistance will be correspondingly 31.46. Obviously still bearish. With that, we'll move into the peso. Also weekly. So the dollar peso broke lower to end the week. The pair will be targeting weekly support level of 21.47 with immediate support at 21.68. Resistance will be 21.98 followed by 22.15. And onto the dollar yen. The dollar yen finished with a terrible close for the week. Immediate support and likely test will be 494. A sustained break will open the door for a test of 384. Resistance will be 592. We're pretty close to resistance, but we're kind of holding up. But if we do break lower, there's that 494. Now, once again, we're on bank holiday, so maybe it'll stay relatively quiet. But that's actually going to be our support. It's going to be the 494. And resistance is going to be 592. And looking here at the cash dollar index. The cash dollar index last week reversed the hammer from the prior week. You see, we had this hammer from the prior week, but obviously with compliments of Jerome Powell, we just reversed that thing and just went south. Open a challenge to a level of 91.42. With this close, it opens a challenge potentially down here to 91.42, which is also the 78%. We can move this a little bit closer here. Go. Which is the 78% of 88.25 to 103.03 that we recently put up in here. Immediate support will be 91.94. See that here. With resistance at 92.79. And with that, we're going to move into the cross rates. Same thing. All these are going to be weekly charts with the exception of the Euro Kiwi, which I kept it as a daily because it stayed rather constrained. But all these, we needed to look at weekly charts to get a better perspective. Moving on to the Euro Kiwi. I'm talking about, I meant to say here to the Kiwi yen. Bear with me. So the Kiwi yen closed at the highs of the week. You can certainly see that right there. Okay, closed at the highs of the week. Resistance to start the week will be 71.79. We actually had the 71.27, which is struggling a bit, but I thought with this closing, we may want to push up a little bit higher. We supported 69.75, but they are struggling right now, at least for today. What we'll do is we'll just, we're already there, but what we'll do is we'll just go with the highs right there, which is 71.52. Since we're struggling a little bit for today, we may revert back to the 71.79 for tomorrow. But today's going to be 71.52. And support, as noted, was going to be 69.75. On to the Euro yen. So the Euro yen rotated lower after thrice challenging 26.48, and you can see that here. 1, 2, 3. We challenged at 26.48, and then we came off quite a bit. Immediate support will be 24.27. I thought we might be able to even break up a little bit lower, but we're kind of holding it as far as today. But I guess it was into the month, and they kind of whacked them good. So at least for today, we'll put this 24.60, and resistance will be 25.98. Well, we're just about there. So once again, 24.60, at least for today, will be on a quiet session. And resistance of 25.98. On to the Euro odd. Once again, also a weekly chart. On the Euro-odd, saw a solid reversal of the last few weeks. I mean, you can see this is a weekly bar. You'd think it was almost a daily, how quickly and how hardcore the sell-off was. So they actually saw a solid reversal of the last few weeks. Immediate support to start the week will be the challenge of the 60-65 level, kind of holding in a very, very quiet session with resistance at 62.41. So once again, support will be 60.65. And resistance at 62.41. Let's go on to the Euro Kiwi. And remember, this is a one that we just left it at the daily, so bear with me. So the Euro Kiwi broke lower on Thursday and Friday and is now headed to support level of 75.85 with resistance at 77.25. So you can see that makes sense. It will be coming down here to test support. And on to the ASEAN. This one didn't disappoint. It's still extending. Others have remained relatively quiet after some pretty good solid moves. Let's go move on to the ASEAN here. Notes. ASEAN closed with a fresh week high on Friday. Resistance will be 77.71, followed by 78.40. Support will be 76.88, followed by 76.37. Well, this one certainly added on to its gains here. Not a whole lot, but at least it added on. And you can see clearly the 77.71 is going to be the resistance. And for support, 76.88. And on to the guppy. The guppy challenged weekly major level at 40.97, but pared back to finish below Friday. Resistance will be 40.97, followed by 41.36. So 40.97, and we're actually, just almost teetering on that, but we have just with a little hair gone just a touch above it, but you can see clearly that 40.97 is going to be resistance. With support at 39.40 if we do get that dip back. We're holding relatively well though for right now. For today, we'll go and leave this 39.74 since we're brushing up against the upper side and it's a quiet session to start with. Let's go and move on to the sterling odd. Okay, starting off, broke lower to finish the week, and broke lower to finish the week. Immediate support will be 80.68, followed by 79.50. You can clearly see the 79.50 here. But the immediate support will be 80.68. Resistance will be 82.80, which is still a step away. We can probably lower that down to about 82.24. With the immediate support at 80.68. And that'll do it here. We'll go in and take a quick look at the equities. Apple did do that 4-for-1 split here, so now we're trading at 124.81 here on Apple. Now just have these set up on the dailies right here, and you can see Microsoft still very, very strong. I will note here that you can see here on Facebook we have a bit of a harami here, and also the same thing similarly to an Amazon, which would open the door potentially for us to work a little bit lower. Same thing here in Google. It's just something to keep your eyes on. NVIDIA is still very, very strong. Look at that. I mean, it's just like to the freaking moon. You see a little bit of thing also Netflix, which did go on in after this big jump. Then the next day we finished right in the middle. This is a little bit odd, but I'm just saying it's still basically like a harami pattern, which really opens the door for a pullback. Doesn't mean we're going to reverse hard or anything like that, but once again, it opens the door. But the two stocks that really have the biggest impact right now is going to be Apple and Microsoft. But look at this move in Facebook, and I didn't even pay much attention to it. I guess maybe I was looking on the 2-hour chart, but look at this. And my thoughts were, you can see this where we posted this. Looked like it wouldn't call it necessarily gravestone doji, but I'm sure people thought, okay, that's it. It's not going any higher. And we closed just above that and maybe trapped some people. So they're thinking, okay, now this is it. Now we're going to rotate lower, and zoom, we get this bar. And then I guess this may have been into the month, or people just had to get out. What a freaking move. Look at that. We gap up, and then we rally all the way up above $300. Now, when I say into the move, as towards the end of the move, because then here was Thursday and here was Friday, which is, once again, this harami pattern, which I noticed at that time when I was looking, I was like, wow. And I thought, I'm going to keep these zeros here because it's going to remind me of, how I think people just got stuck in this position. Probably felt pretty strongly that we're into some resistance. Remember, we couldn't take out 268. Probably thought, okay, we're going to rotate back here to 250, come back to the trend line. We're holding. We close right there at 268. Then we trade very, very quiet. And the market gaps up, so maybe some people got stopped out and they say, okay, this is it. Now we're going to get lower. So we jump up to here, and then this really just knocks some people out of the box. I mean, holy moly, look, we were trading 268 on I guess it was actually Wednesday. We got all the way up to 304, and then you have this like harami type pattern, which really opens the door for potential we could go in and come back down. And if you see here, then I looked around, and Netflix, although I think Netflix is a bit of an outlier because it was such a strong move here, because it looks like they're going to have. They were doing some, I guess, polls or whatever, and asked people, what services, online services, will you keep post-pandemic? And Netflix was right at the top of the list. So that's why we got this huge, big jump. But still, nonetheless, we're kind of in the middle of the road here. Same thing, similar harami, just like you're saying right here with Google. Once again, I don't think we're going to reverse or anything like that. But just to pair back, and once again, we'll go to the equity indexes. If you look here on the 2-hour chart, look at this phenomenal move. right there. Look at that. So even if you just pare back a little bit, you see what I'm saying? You can see that that's, this is just March. You would think, oh, if there's a big move, this is probably back to April or something like that. I mean, look at this move here. This is just May. You see what I'm saying? So, which I've had to be careful. This last week, I've actually had two fat finger trades and one that went that I accidentally somehow I think I ended up reversing or whatever. I don't know what it was. So I've had to be careful with my settings now. I'm being very, very careful now, especially at these levels, because you can see big prices move. So I'm just not gonna have any hotkeys or any kind of I'm gonna do everything. Force myself manually to do everything from the lowest increment, so I don't. Like I said, two fat finger trades was more than enough, and then one that I think, if I remember correctly, I think I ended up reversing one. I think I ended up. Oh yeah, I thought I was covered, and I ended up buying the doggone thing. So I'm going to be pretty cautious going forward, especially at these levels, because anything can happen. I'm just saying, it's not that I'm expecting some kind of mass reversal. One thing I will go on and point out. This is on the daily, and a lot of people are paying attention to the 5-day moving average, and boy, we are holding up really well here. And so some people that are long, they've actually been long from further back, are actually using the 5-day moving average on the close exit, and certainly we're still even further away from that. That's still, look at that, 18,059. So, but it'll be interesting to see how today trades. And then if we look here, when we look at the range that we saw here, right here, then it looks like about 12,012 would be 127% extension, but we're not anywhere near that, or 12,110. We were close to it earlier, but you can see us rotating away from that. So anyway, that's all we have for today. Thanks for joining us here on the European Crossover webinar, and we'll see you in the chat room, and I'll get the bias chart posted.